Welcome back to the Talking Hedge. I'm Josh Kincaid, and this is your cannabis business podcast. Unlike most cannabis stocks, this one's actually making money. Organigram Holdings is a Canadian company that grows and sells medical marijuana. Its products include various strains, oils, and even vaporizers. What the article doesn't go on to say is that Organigram is making 40,000 joints per day, pre-rolls. They're manufacturing 40,000 pre-rolls per day, not necessarily just for the Canadian market, probably for exports. There's 70,000 people in Germany that have access to insurance that will pay for medical marijuana. I'm not sure what the legal rules are, but essentially, if you can manufacture 40,000 pre-rolls a day, it's definitely not going to be for your town or your municipality, your province, or even your country. You're probably looking at global exports. And so this company definitely knows that pre-rolls are the number one product sold and that a lot of people are buying them. And so they've invested heavily. Not many people are talking about it, but it is definitely interesting how many they're manufacturing, and is obviously not for the local market. So stay tuned with Organigram, the ones making money on the back of pre-rolls. Is now the right time to invest in cannabis? Cannabis stocks appear to have lost their charm from a few months ago. The sector has been moving sideways since March, and some cannabis companies' quarterly results failed to impress. Canadian market supply shortages, poor earnings, and delays in retail cannabis outlet openings, and the United States' slow legalization of cannabis have all weighed on the cannabis sector this month. The cannabis sector struggled in April with just a handful of major stocks staying positive. March was similar, with cannabis players largely moving sideways. Among the cannabis sector players, Tilray is the odd one out, but it's the only stock trading lower than it was at the beginning of the year. The stock's fallen 25% since this year and 19% this month, whereas Aphria has also fallen this year by 19% and risen a healthy 29% this year. Canopy Growth gained 15% in April and 86% this year, while Aurora Cannabis has been flat in April but returned 79% this year. Hexo stands out amongst its peers as one of the few stocks that has risen consistently in each month of the year and has risen 19% this month and 123% this year. Predicting the future for 5 top cannabis stocks. The major volatility in cannabis stocks, with some falling short in recent weeks, may present an ideal opportunity for investors to buy on the dip. 5 stocks positioned to outperform include Aurora Cannabis, Canopy Growth, Hexco Corp, Charlotte's Web Holdings, and Tilray, according to several analysts. While the cannabis industry's related stocks have soared in 2019 with the ETF MG Alternative Harvest and Horizon's Marijuana Life Science Index up 44% and 53% respectively year to date versus the S&P 500 17% return, many individual cannabis stocks have fallen recently due to the myriad of concerns. Headwinds include broad industry uncertainty. Cannabis remains illegal in the U.S. federal level, and investors face uncertainty surrounding revenue, supply constraints, and quality issues. All of these stocks have experienced wild swings in the past year. In recent weeks, Aurora Cannabis and Charlotte's Web have pulled back, while Canopy Growth and Hexco have surged during the same period. Tilray spiked in November and January, only to see more declines this year. Bank of America's Merrill Lynch analyst prefers Aurora Cannabis, Canopy Growth, and Hexco, initiating coverage on all 3 with buy ratings in April. While the infrastructure of the cannabis industry hasn't been quick enough to keep up with the rapid increase in demand on the back of legalization of the plant in Canada and other jurisdictions, Bank of America sees the issue as a temporary one. They think that the distribution channel constraints in Canada could prompt companies, namely larger ones with capital, to seek strategic action in international jurisdictions, including potential deals in the United States and Europe. Cannabis stocks are likely to face more market choppiness due to regulatory concerns and other risks, such as difficulty in meeting demand and quality standards. But those focused on the long-term growth opportunities of the budding industry are undeterred. Those willing to take on the risk may profit from a legal market expected to reach tens of billions of dollars globally. And with that, we're going to wrap this one up. I'm Josh Kincaid. This is The Talking Hedge. Don't forget to like, share, and subscribe, or don't, and I'm out.